All right. Hey there. Chris Franks with Texas West Capital coming at you live just a few minutes after 11 a.m. Central Standard Time from just north of, what is it? Just north of Houston, Texas here. It is Tuesday, the 25th of April, 2023. I hope you guys are doing all right. Got some stuff going on. Bitcoin kind of pulling back a little bit. People freaking out. We know how it goes, right? But we don't worry about that a whole lot, right? So we kind of let people do their thing, and then we kind of pay attention to our own. So hey, good to see you there, Kimazabi. Andrew Bennett's here, Bamboo, Jonas, Nevlusian, Data. Good to see y'all. Oh man, Data, that's rough, man. Going to the dentist. So hopefully you get over that pretty quick there. So yeah, again, we're kind of at this point here, and the question is the dollar dead? And we'll talk about that in a minute because central banks across the world are kind of doing this thing where they're collecting, they're stockpiling gold at the fastest, greatest level since, I guess it's right about 1950 when the when data started first becoming available, this type of thing. So be kind of interesting, right? Kimasabi says, would love to see a Fibonacci special threshold chart. Well, you'll have to talk to him about that. I don't have access to pull out his charts. So, but he'll have them on next time he's here. Again, every other Friday is usually when we do that. Good to see you, Hank. So yeah, the question is the dollar dead? Everybody talks about the dollar and, the BRICS, BRICS, that little group of people are kind of saying, oh no, we're not going to use the dollar and whatever's going on there. So we'll talk about that. Excuse me. We're going to talk about Bitcoin today. We're going to talk about, probably take a look at Ethereum. We're going to talk about the VIX 1D, which is the new futures VIX indicator there. So, the other VIX that we've been using forever and a day from the CBOE, the volatility index is based on a 30-day contract. This other one is 1 day. So supposedly it's going to allow you to better work with these news releases and stuff like that. I don't know. I've seen it mentioned that it seems more like a lottery scratch off ticket, and I think that may be true. So you'll probably get similar results from people. So think about that before you use it. But anyway, yeah. So we'll talk about a few of these things here. We'll look at the dollar, of course. Maybe take a look at Doge, Ethereum, Bitcoin, maybe Link, a few like that. All right, we'll take a look there at gold as well, since obviously that's what we're talking about here, right? But before we get going, excuse me, man, I'm just having an issue with my throat today. I apologize for that. Let me see here. We can look here at the CME Fed Watch tool here, right? And so what are we seeing here? We're seeing, again, we are currently at the 4 3/4 to 500. So 4 3/4 to 5 on the interest rate there on the Fed fund rate. They're pricing in now an 86% chance of a quarter basis point rate hike coming up here on the May 3rd meeting. Okay. So nothing surprising there. You guys know me. I figure we're going to have one more and then we'll pull off from that. If we look at the June, what are they looking at in June here? They're looking at keeping it flat at June. Slightly about an 18% chance of another quarter rate hike in June, and then a 13% chance of a quarter point reduction. As we continue going here into July, again, still the biggest belief is a hold there at that 5 to 5 1/4. And they still got, a little bit out there thinking it might get that 1/4% raise there in July. Get into September. And by the time we get into September, then we start looking at this idea that the Fed will start slashing interest rates, right? So get it back down to 4 3/4 to 5. And then, of course, as we get into November, another slash potentially. That's where the biggest bit of belief is at the moment. Get us to 4.5 to 4.75, and again, then once more 4.25 to 4.5, but pretty close to as staying flat there, 4.5 to 4.75 there in in the last month of the year here. Now there's no surprise there again. This is something that I've talked about. I know the Fed says, oh, we're not going to hike rates until next year or beyond or whatever. But that's what they always talk about, right? That's what they always say, and they rarely follow through with it. So again, usually, they end up bowing to pressure before they get to the point where they say they're going to get, right. So again, my idea is that we at least have probably one more coming up here, and then we're flat through the end of the year. If through the fourth quarter, and by the time we hit the fourth quarter, I think we should at least get 1/4 point drop, potentially more, but at least one. So, again, we'll see how all that plays out. Why that important for you? Because again, that has to do with the economy, and not that it necessarily works to fix the issue we have with prices right now, but it's definitely going to help hurt it some more, right? So again, you're making things more expensive, means less people can buy it, means less production, means layoffs, means unemployment goes up, stuff like that. But for right now, unemployment's still just holding crazy, man. It's still holding out, now near those lows, near that 3.5% area. So for now, unemployment keeps holding up with it, right? So we'll see how that goes. Let's jump over here to the article. Where are we at here? Oh my gosh. Let's see, is that it right there? Yeah, I think that's what we got right there. Central banks are leading a revolt against the US dollar and shifting to gold at a record pace, market expert says. So, again, now you got to understand when people write stuff like this, again, they try and connect dots, right? So they have a bias, an idea that they think is happening, and then they try to connect, they try to make that more relevant or more likely based on information, right? So you got to take it with a grain of salt, but some interesting things in here. So central banks, as it says here, account for 33% of monthly global demand for gold. So his conclusion there is the oldest and most traditional of assets, gold, is now a vehicle of central bank revolt against the dollar. And so, we kind of get to a point, and he might, he mentions there that countries are serious about seeking alternatives, but what countries and what kind of, does it really matter? Are they enough to really matter, right? And so, again, he talks about how we've the value of gold here has surged 20% in the last half year. But he says, again, that demand is coming from central banks reducing their dollar holdings, not the usual suspects made up of large and small investors. And so again, he's saying, okay, well, the gold rise is happening, but it's happening because banks are trading dollars for gold, basically. Okay. So it says here that central banks account for a record 33% of monthly global demand for gold and are buying more gold than at any time since data began in 1950. So, of course, that gets us where we are. And then it comes in here. So here's where it gets interesting. It says 9 of the 10 central banks buying gold are in developing countries, including China, Russia, and India. Well, okay, so yeah. So we know, again, with Russia, we kind of cut them off from SWIFT, did all that stuff, right? So they've got a reason to, to be going to gold, right? They really have little other kind of chance of anything else, right? China is also, trying to weasel its way in there, kind of push its way, muscle its way into becoming the world reserve currency. But again, we've talked about this before with, debt is the way of the world right now. And, China has like 5%, in the Chinese yuan, right, of the worldwide debt versus 60+% of worldwide debt in US dollars. So, it's kind of hard to become a world reserve currency, right, when you don't make up barely a snippet of that world debt, right? But they're trying anyway. And then, of course, India, India is a big country, a lot of people, but, it is also jumping in there. But it says those three countries, along with fellow BRICS nations, Brazil and South Africa, are also part of the effort to create a new currency that's separate from the dollar. Now, you have to understand here, guys, they're trying to create, not that they're creating, not that it's going to happen, not that it's even going to be successful. They're trying to. And this is where people have to, a lot of retail read this and they go, okay, well, there it is, right? Well, no, just because they're trying to doesn't mean they're going to be successful, right? There's a lot more that makes up, the ability to be that worldwide reserve currency kind of thing, right? Including things like debt and military and all this other stuff. And so, yeah, I mean, they can try, but I don't see it happening, or at least not anytime soon, right? We've talked about that. And so he says he attributes the rush to gold for the increasing use of financial sanctions by the U.S. and its allies, with as much as 30% of nations facing sanctions from the U.S., European Union, Japan, and UK, which is up from 10% in the 90s. And of course, as we talked about here, when Russia invaded Ukraine, the West here froze the country's currency assets and kicked it out of the SWIFT system. So again, Russia has a reason to go to gold and has a reason to try to make this other thing work, but it doesn't mean it's going to, right? Now, one thing I can agree here. Suddenly it was clear that any nation could be a target. That is something that, that if you're a country, you would be looking at going, yeah, okay. You got to start looking at, well, what else can we do? But, again, the idea is, how short term is this going to be? If this whole thing that we're going through here, this 30% sanctions, blah, 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 is in the grand scheme of things, it doesn't mean it ends next year, but in the grand scheme of things, it's a short kind of term thing. Then, again, they try their thing, doesn't work. Everybody kind of comes back, right? But yeah, now he also talks about the fact that a number of central banks are attempting to create digital currencies, and that the number of those central banks attempting to do so has tripled in 3 years. So, he sees that as a risk to the U.S. dominance as far as, U.S. dollar reserve currency kind of thing going on. But, and so again, it comes in here, the risk for America is that its overconfidence grows, fed by the no alternative story. So, no real alternative to the U.S. dollar. The narrative rests on global trust in U.S. institutions and rule of law. But this is exactly what weaponizing the dollar has done so much to undermine. It rests also on trust in the country's ability to pay its debts, but that is also slipping as its reliance on foreign funding keeps growing. So, again, and then it makes a point here, says others have been less wary of de-dollarization fears, citing that the trust in the greenback is difficult to replicate. And it's true, as I've told you guys, again, a strong alternative was to emerge. It would take monumental effort and persuasion to replace the dollar. So, I mean, again, guys, we have the guy who wrote this article who has a bias, right? I mean, you can see that the bias in there as he's speaking about it, right? You can see that he very clearly believes in this de-dollarization thing. But, does that make a whole lot of sense? And this is a thing I've talked about time and time again on here. I don't think it does. Again, it's nothing that would happen overnight if it did happen. And it is likely to happen at some point. Again, fiat currencies have a certain lifespan, right, throughout history. But it certainly won't happen overnight. And, if it does happen, again, there's so much that the other currency would have to overcome, right? Again, the world's debt, military, because you got to be able to protect, right? The use of the world and of the major countries in the world, right? If you have a couple of small countries refusing to do business in dollar, well, I mean, that's not a big deal, right? In the grand scheme of things. So, there's a lot of things that have to happen, right? Yeah, I'm not, you're clearly not unbiased either. Neither am I, by the way. Yeah, I mean, it doesn't have to do with me just, you say that kind of in a kind of catch you kind of way, right? But really it isn't. Again, yeah, I've got a bias. It's the idea that the dollar is going to withstand, at least for a while. And, my bias is based on, these things I keep talking about. So yeah, but that bias there is, again, you look at, okay, here is the great strain of evidence, right? And this is the thing that says, okay, well, the U.S. continues on. Again, we've had this romanticizing of the death of the dollar since the Bretton Woods, right? And you're old enough that if you've been, I don't know how long you've been paying attention, Hank, but this has happened. This happens every decade or so. Really comes in sometimes 5 years, but usually every decade or so we get this great romanticization of the death of the dollar, right? Oh, it's going to die and whatever, and it doesn't. And so stable coins and whatever, Bitcoin are all new now, but it's just another excuse. It's just another reason to say that the dollar's going to die. Could it happen? Sure. But again, you've got to take a lot of fringe stuff to kind of go in that direction right now. Now, again, that doesn't mean that over time it won't get there, right? That this stuff can't build up. But this idea, people are pushing this idea that the dollar's going to die like tomorrow, and it's so silly. It doesn't happen that way, guys. The dollar is so ingrained into the overall world, the way the world works, right? Again, you talk about debt, the whole reason you have a reserve currency is because it makes trade between countries easy, right? Instead of having to trade my currency for your currency, for their currency, for the other currency to get to whatever you want to buy, you both exchange for dollars, and that's it, right? And you just use the dollars. Gold is still difficult, guys. Gold is, what are you going to do? Ship 400 trillion worth of gold from one country to another? So, I mean, again, that's why it kind of went to the dollar, right? Was because you can't. Gold is not easy to move. It's not, and everybody goes, okay, well, that's the reason why Bitcoin's going to be the big thing. But again, how would Bitcoin be the big thing, right? How would it be this global reserve currency? It doesn't have all these other factors, right? So it doesn't make a whole lot of sense. I know people want to, and most people want to, not because they understand how things work, but because they own some Bitcoin and they're still thinking in terms of dollars. And they're thinking, man, if that thing becomes a world reserve currency, then it's going to be worth this much. And Crypto Critical believes that, unless those BRICS plus nations throw a spanner in the works, they may be working on something. I mean, again, can work on something all they want, but it's nothing that happens overnight, right? This is something that would take years and years and years to kind of change, right? It's nothing that can possibly happen overnight because everything right now is based on the US dollar. So if you were to switch that, I say overnight, but let's say within 2 or 3 years, that would destabilize the global financial everything, right? Because the dollar is so ingrained into everybody, into everything that everybody does. And that includes short, mid, and long term, right? And so if there's going to be a change, it can't be anything quick, because if it's quick, it's going to completely destabilize everybody, and it screws everybody, including China and Russia and the rest of the BRICS and all that kind of stuff. So, I don't think people really kind of get into, they just again, they romanticize the death of the dollar. It's like, oh my God, it's going to die and it's going to be so great. Kind of like Bitcoiners with this whole thing. Oh yeah, the government's going to fall and it's going to be so great because we're going to use Bitcoin to transact. And, nobody's really thinking about Mad Max or worse yet, just this complete and utter desolation and destruction that would occur from such a thing, right? So it's a lot of, I don't think there's a lot of real fully thinking through it. Again, would definitely be something that would take time to do. Now, one more time, I want to make you understand that I don't think that the dollar is going to run forever. Again, historically, fiat currencies have a limited time, right? They have a limited lifetime. But, at that point, again, like I said, I don't think it's something that you wake up one day and all of a sudden, your US dollar is no longer the reserve currency. Does that make sense, guys? So, yeah. Some other comments here. Hank says the RMB is valued based on the USD, so no way. Believes that USD will be reserve currency for a long, long time. Bamboo says if the yuan would become a world currency, all of their billionaires would have a chance to flee China, and Chinese government doesn't want that. Of course they don't want that, right? So yeah, there's a lot more in there, right? Let me see here. Cameo, what's going on? Says if the Fed continues printing, then the dollar will hyperinflate, which is basically the death of the dollar, and it could happen fast. Argentina and Zimbabwe, the Weimar Republic, all happened fast. Yeah. So again, I think that's really those are. Don't take this personally, man. But what you're saying there are a lot of just sound bites that people throw out there, right? But first of all, Argentina and Zimbabwe are not comparable to the U.S. because the U.S. is the world reserve currency, right? Weimar Republic was not simply because of this big printing that went on. There's a lot more into it. I've talked about it before. You can probably find it on my my timeline on Twitter in there. But yeah, I've discussed that before. Again, people just say, "Oh, well, these are times where we've had this, so it can happen in the U.S." No, it doesn't happen like that. Again, by the way, we've had, you talk about all this printing, but yet this year, the M2 or last year, the M2, the amount of money in supply actually decreased, right? And it hadn't done that, I don't think it hadn't done that since like the 1950s or something. But there was actually, because of the Fed's QT, right? They were actually taking dollars out of printing, right? So, everybody talks real kind of lackadaisically about if the Fed continues printing, right? But here's the thing, guys. Just printing doesn't mean anything, right? Because as long as those dollars are desired, right? As long as there's people that want them, right, in a significant enough fashion, then the printing doesn't matter. And right now we know, as I've shown multiple times on the show here, the world itself, right, is having a lot of a dollar liquidity issue. They want more dollars than are available. You see what I'm saying? So again, again, all these things, people look at printing and they say, okay, well, here. But, again, the dollar is part of this other wider thing, this euro dollar thing, right? These are dollars that are banked offshore that the Fed doesn't have control over, right? And so nobody ever really talks about that and what's going on there, which I think is probably a bigger indicator of what's going on overall with the dollar. But we won't go into that right now because it's a lot of stuff to overtake. But I've talked about it before. But yeah, again, guys, just continuing to print dollars doesn't actually, in and of itself mean hyperinflation is going to be there, right? As long as there's enough demand for those dollars that are being printed, you can't get to that point. Now, if they print obscenely and nobody's interested in those dollars, well, okay, then there's a flood of dollars sitting on the market, whatever, and then you've got that chance to do that. But even at that point, again, with the US dollar being this global reserve currency and there being a current liquidity crisis for the dollar for people that want it all over the world, it's really hard to make an argument that there's hyperinflation coming right now, right? So just a lot more stuff beyond the simple kind of sound bites that sound really good. And, if you don't know anybody, you think, oh, yeah, that sounds really good. It makes a lot of sense. And that's the way it is. Oh, yeah, But when you actually start studying it and you start understanding how things are working and you look into deeper metrics, you go, okay, well, probably not, right? Yeah. And I appreciate you being so, so respectful back and forth about it because, again, I'm not out here trying to make anybody feel bad or dumb or anything. Macroeconomics is this big, wide thing, right? It's this huge, so many moving parts, and most people are not equipped to deal with it. And even those that are still going to be really held by their biases, right? And that's a tough thing. Even me, it's tough. We all have an idea of the way things should work or whatever. It's really tough to look at that and then get new information in and go, okay, well, maybe I need to change what I'm thinking, right? But a lot of sound bites that are being pushed out there on large platforms, right? Large content creators, right? They sound like they make a lot of sense. And that's why it's easy to grab onto them and go with it. But when you actually, like I said, delve into these things deeper, you start saying, okay, well, there's more moving parts. There's more things at stake here. There's more things involved than simply, oh, we're, printing all this money and that means hyperinflation, right? So yeah, man, I appreciate, that you're always just so respectful, man. I really appreciate that. I deal with so much nonsense on social media, man. You don't even know. He says, Russia and China and Saudi Arabia not settling in dollars is huge. No, that's hundreds of billions. Quantitative tightening leads to QE and the whipsaw economy continues. Yeah, no, it's not that they're not settling in dollars. They haven't said, okay, we're just not going to do this anymore. Saudi Arabia said, okay, yeah, we can maybe do some of this in the Chinese yuan. But Saudi Arabia has not said we're not doing anything in dollars anymore, right? So, it's not that, oh, they've just simply cut out dollars. That isn't what's going on, right? Now, again, the only one in that is Russia, right? Russia's the only one that's kind of screwed in all this. Russia can't access US dollars and whatnot. It can't access the SWIFT system, right? So, again, in the grand scheme of things, no, it's not yet really an issue. Now, might it become an issue if all Saudi Arabia was to deal in was the Chinese yuan or something like that? Then it could lead to maybe something, but they're not. It's a very small part of their overall thing, right? So yeah. Let me see here. Hey, Antonio, what's up, man? Good to see you. In this time of uncertainty, cash will always be king. I mean, it is until it isn't, right? For now, we've got this pullback. If you guys follow the milkshake theory, right? A lot of people don't really understand it, so they kind of say, "Oh, well, look, the dollar's been dropping in value, so it doesn't work." Well, no, again, it just kind of keeps prolonging this potential end result, right? The real thing about the milkshake theory is when you start seeing it continually rise, right? When you're popping out, again, we hit that 115 level, but when you're popping up maybe, at 200 or something like that, then you see it play out fully, right? But as long as you're pulling back, all you're doing is kind of extending the time, right, until that happens. It doesn't mean it's all of a sudden invalidated, right? So, a lot of different working theories and stuff going on out there. Hank says very few dollars are printed anyway. Derby Bound said, that's why I don't think the US dollar will go out the fashion of anytime soon. It's in other countries' best interest to keep the USD. And it really is, guys. There's not a whole lot that the BRICS can kind of give them that would convince most large holders and users of the USD to kind of drop the USD, right? Again, even if they wanted to, they're already so entrenched in USD debt, right? It makes it really difficult to do something. It's nothing that can just happen, right? Let me see here. Let me kind of catch up with you here, and then we'll start looking at some charts, guys, okay? Crypto Critical says France is now dealing with China and Juan. I think the more rats that leave the ship, China has huge influence over here in Africa. You even have police that have to learn how to speak Mandarin. It's not that France is really that big a deal, honestly. And how long will they continue to do it? Again, you can jump on the train and start dealing in a certain thing, but how long do you stay on that train? How long is France going to continue to be on that if there is no US, if there is no dollar or, any de-dollarization, significant de-dollarization? It doesn't make sense for them, right? So, again, guys, it's nothing that would happen overnight. It's something that would take a long time to do. Hyperinflation is not happening overnight. It's not happening here in the US anytime soon, right? And this is just reality. I know, again, the sound bites sound good. It makes people want to believe, but at the end of the day, it's just a soundbite, right? But that's a lot of the issue that we fall in, especially with the advent of this global internet and all this social media. Is everybody lives on sound bites. Everybody wants the 5-second clip. Nobody wants to actually go in and take some time and effort to really learn things, right? They just want a 5-minute clip that sounds like it makes sense, and then they can parrot that everywhere. And that's one of, me being, a bit older, almost 50 now. Geez, it's so weird to say that. And that's where I remember a time when we didn't have that so easy. I mean, it was still out there. The 90s, you were still kind of, you started to be warned about, sound bites really in the 90s. But, it's this thing now that's just so ubiquitous with all this, global internet and all this kind of stuff, right? Let me see here. I'm Deuce. What's up? Ahmed, I sell you as well. Babu says the Swiss franc is the real milkshake theory. Oh man, I need to check that out. Let me see here. I think the biggest threat to hyperinflation is population decline and wages. Weimar had the same issue with all manpower lost from the war. Mass immigration will be needed. I read recently there's a 25% drop in 1 to 4 year olds in the U.S. in the past 5 years. Grain of salt stat though. Yeah, again, there are definitely other things going in there, and it's not just in the U.S. It's a lot of countries are having these this big decline, right? So you can look China. China instituted the one-child policy, decades ago, and they're seeing, again, they're not growing like they should, right? Um, and then you have Japan. Again, we hear about the young men and women, or especially the young men who are choosing not to be sexually active with women, and they're all hooked on their internet and whatever else is going on there. And there's a couple of weird things, but whatever. But again, there's a decline there. The U.S., as you mentioned here, is starting to see this decline as well. So yeah, I think that potentially a bigger issue as well, especially when we think about think in terms of debt and having to pay it and stuff like that, right? Let me see here. Andrew Bennett says DXY daily. I know you're not a fan, but it looks like an inverse head and shoulders. Yeah, we'll talk about that here in a minute. Chris says can't afford kids in Biden's America. All right, guys, let me jump over here and let me see here. Let's get a chart up here. All right. So I mean that's kind of what I'm thinking on all that, guys. Let me see. Oops. Let me get that up there. Where is it? All right, there we go. And here it is. And let's get it up there for you. All right, there you go. Okay. So here is the monthly on the DXY, right? And so again, you can see from, all the way back over here. This is the great financial crisis over here, May of 2008, right? And you see the dollar has continued to rally in spite of the QE, right? Now, we're not really so much worried about the QE happened back here, in 2010 and 11 and all that, because that was a different type of QE, right? Again, it matters where is the money going, right? But here, everybody's so worried about this money printing, right? And what's happened, we've only recently started QT. You guys talk about hyperinflation, you talk about all this money being printed, and yet the dollar itself, it had the initial drop, right? And then it's had this much larger climb after that. So if you're concerned about, about hyperinflation, stuff like that, I mean, how do you rectify this right here? This has been that continued, printing here, We didn't start taking anything out until, right in this area here, right? So again, this is just to show you that printing dollars alone doesn't mean that hyperinflation is going to come. That's the soundbite. The soundbite is, oh my God, we're printing all these dollars and now we're going to hyperinflate. Well, if that was true, then why is the value of the dollar against other currencies going up? Well, that just means that they're printing a lot too, and the dollar's just not printing. I mean, I don't know. Everybody's going to find a reason to kind of support their narrative, right? But at the end of the day, you just watch the charts. Again, it's not just simply printing dollars in some quantity that all of a sudden guarantees hyperinflation is going to be there. As long as you continue to have demand that somewhat keeps up with that keeps it from being able to break out at such a great level to create hyperinflation, then you're not going to get it, right? Does that make sense? Chris says, what else changed in the past couple of years other than pumping $6 trillion that doubled our money supply? Obviously, everything now costs double. Yeah, things are a little bit more expensive, but purchasing is down, right? So yeah, I don't think 107 to 108 is imminent because that means, again, you have to break out above where you've already been rejected, right? Could it happen? Sure, it could. I don't think it's imminent, though. I think there's a difference, in the verbiage there. But even if, again, you're looking at basically a move down, you get a corrective move up and then further down, right? So right now you can see that we found support at this kind of resistance area here. But even if we're to rally here, we still have to break out of this 105.78 kind of level before we even start thinking any higher here, right? Me, I'm still thinking that we get rejected and we come on down here at least to the S1 pivot here on the weekly, monthly, right there around that 93 and some change. And, getting down there, I think we still go further. Now, could that change? Sure, it could change. But right now, I think if you're thinking right now, I think the problem with a lot of traders out there is that they think in terms of what they believe has to happen. And they skip over all the things that have to happen first in order for that thing to potentially have a chance of happening, right? So, again, they think, okay, well, price has to do this thing. So they're stuck on their bias of whatever they think it has to do. Remember, price doesn't have to do anything other than what it's going to do, right? As traders, we get in trouble when we start saying that price has to do something, right? I mean, if I'm even, again, if we just lose this right here, all of a sudden we should be looking lower. Right now, I would say the pivot, but there's this little bit above it. So it's really this area above the pivot. I mean, that's your resistance. You have to get through that. Until you get through that, why are we even talking about anything higher? It was, it was rejected here, right? Once, pull back, rejected again, pull back. I mean, it's been rejected twice there already and sent down to the same low area, right? So again, we'll look to see, if that does break on down further, then we'll get down toward that S1 pivot, right? So yeah. So, again, still kind of looking for, the dollar to continue lower right now. And, we'll see how that happens again. If it does pop up here, we're looking at this to hold as resistance. If it doesn't, then we can look up here toward, probably toward this 108 and some change area. And then if we were to break out above that, then okay, then we start looking, okay, maybe there's an argument that this breaks out higher. But again, until that, it's what we're looking at, right? Let me see here. So yeah, that's kind of what, what we're looking at here. By the way, again, you can see that we've got this kind of support level here in the upper 80s. And, if we're losing that, I mean, again, you should be looking down here into the lower 70s, right? If we look at the history of the DXY, remember, guys, this isn't the dollar. This is the DXY. This is the weighted basket, right? This is the dollar versus other currencies. And really, it doesn't tell us what the value of the dollar is. It just tells us, is the dollar gaining in value against this basket of currencies? Meaning, is it more interesting for people to hold or not? That's all we're really kind of looking at here, right? So you've got this start way back over here in 67, right? And the drop down into late 70s, rally up here in mid 80s, 85, drop back down 92, rally back up, the dot-com bubble, drop back down here to the great financial crisis. And then, of course, you had this rally up until this point over here, which then started the COVID decline. And, of course, we've got the breakout up here, which has just been recently there. But, again, hitting this this resistance right here, right? You see all this supply that's up here? See where we are? So you've got resistance and support, sideways, resistance. And that's where we got rejected. I mean, it makes all the sense in the world, right? That's why when we were down here and I said, okay, in 2021 here, when we were hitting those lows, right? And I said, well, it looks like, or 2020, no, it's 21, right? Anyway, I said, it looks like, we're at that low, and I gave that target at 114 to 115 because that was up here in this. And, again, we hit that 114 and what? 114.778 or so. So we hit the 114. We hit my target that I gave way back down here because, again, of the congestion up there, right? And so now, again, now we get to kind of see, okay, well, what's going on now? How do things look now? What may happen here, right? Hey there, Merrick. Good to see you checking in. So, again, locally anyway, we have the resistance right here around the pivot. It's been rejected a couple of different times there. If we zoom in a bit, right, we can see why. Let's kind of zoom in here a bit. Do you see where it's rejected here? You see how you got this rally up, this pullback, and then this rally up and pullback, and then the breakout, and then the retest, right? This area right here, right? That area right there, we get this resistance and support. I guess probably pull it right up here to get this support right here, right? Resistance right there. So that's where we hit. We were rejected once, fell down, rejected again, fell down again, right? Now, this is that the head and shoulders that everybody's really interested in, the big one. Again, not a big fan of it, but if you are, then a breakdown through this neckline should get you down here at around 88.75, which again gets us right into that same blue support structure that I was showing you guys, right? Personally, again, my idea based on pivots and the way things generally trade is if this is a good rejection here, we should come down to the S1, rally up toward this area, and then come on back down further. If we look in locally in that, somebody was mentioning inverse head and shoulders. Not a big fan of it, but again, if you think it is, you're looking at this kind of thing right here. Which one's the high one here? Let me see. 102.228, 102.231. See, this doesn't work for me. Because if this was an inverted head and shoulders, your neckline is this right here to this right there, because that is the swing high. That's 102.231. This one is 102.228, right? This is lower. You're going from the high to the high. And so as you can see here, you're kind of already breaking out through it. So I don't remember who that was mentioning that, but yeah, if you're looking at that, if that's what you're looking at, then that would be invalidated there, right? You don't just draw a line here and go, oh, well, this is it right here kind of thing. That's not how you do it, right? So yeah, wouldn't look at it. But there is this outside bar bullish engulfing candle that is printing on the daily right now. So that's interesting. Again, could give this as an A and a B and a C to rally up higher, but I mean, even here, not just the weekly, but the daily right here, right? You're still waiting for that daily to finish up. You can go maybe like a 1, 2, 3, 4, 1, 2, 3, 4, 5, right? And then you go A, B, C. You should only be looking to get up here 102, 103. That should be all you're really looking at, right? That'll get you, if you come off the low here, yeah, 38.2, maybe 50%, right? But if you look at this as a 1, 2, 3, 4, 5 here, well, again, wave 4 is usually the first target for your wave 2, right? Wave 4, the lesser degree. So, 103.3 doesn't look like a terrible target if we get there. But this is 5 waves down. So you'd expect that to be 3, right? Because the idea is we've got a 1, 2 here, and this becomes a 1, 2. And you'll notice that this first subwave terminates right around the previous swing low, which is what we look for when you look for that continuation lower, right? You'll get a 1, 2, and then your first subwave of wave 3, your first one of 3, terminates a little bit before, a little bit after, most often, that swing low, or if you're going the other way, the swing high. So, I mean, just looking at, if we use Elliott wave as our understanding, then, again, that would be my first thought there. That would be what I would be looking for, right? The other way to do it is if you're trading pivots, this is what you look for. If you come in between the pivot and the S1, you usually, and you drop down to the S1, sideways drop the S1, get a support, then oftentimes you'll rally up toward the pivot area and get rejected and continue back down. That way, right? So, yeah. I haven't looked at silver yet, no. During that streaming, which streaming? This one? Hank says mid-80s, it's been written, talk about the DXY. Let me see here. But yeah, so I mean, again, wouldn't be surprised to see it rally up toward that pivot and then continue lower there, right? Did you already talk about the weekly RSI bull div? On which one? You guys have to be more um, specific. You guys got to let me know. You mean this one right here? You got these higher lows. Well, see, here's the problem. Here's the low, which is here on the upswing. It's not on the swing low. So it's not really bullish divergence there, right? Because your swing low here is not on that low. Remember, guys, if you want to do divergences, your extremes in your price have to match your extremes in your RSI. If they don't match up, then it's not the divergence you expected. And so it doesn't work as you may expect it to work. Now, sometimes it can still follow through because you're still showing, in this case, momentum increasing while prices made that drop, right? But the fact that it doesn't, the fact that it doesn't do it at the same points, at those same extremes, talks about the fighting that's going on in the market, right? If one side is in control, then you get the price extremes at the RSI extremes. If there's an argument between supply and demand, then you're going to get it offset, and that's when you have to be cautious, because if you have one side in control, then that divergence tells you, okay, they're done, right? Most likely heading the other way, right? But when it's just momentum is trying to, right? Momentum is trying to show up. It's not exact. So the fighting between demand and supply, it could easily not work out. Does that make sense, guys? Hopefully that makes sense. I know people, they want to be like, I know a lot of traders come in, they say, well, it's close enough, But I'll be honest with you guys, when you're trading, have definitive rules. If you have these things where you say, oh, well, it's kind of, but I'll let it go. It's almost there, so I'll count it. When you start doing that, you're fudging on what you're looking at. You don't have specific rules anymore, which means you're going to continue doing that, and you're going to continue to try to make the chart fit your narrative. This is the problem, especially for new traders. This is a big problem, right? Because emotionally, especially if you're a new trader and you haven't figured out the emotional side of it yet, emotionally, you are going to be biased to one thing or another, and you will then look at the chart and try to make the chart fit what you think has to happen, rather than allowing the chart to tell you what's happening, right? And so that's a great little segue into Bitcoin. Let's talk about Bitcoin and let's discuss that a bit more, all right? Let me kind of get to this chart right here. So I have posted numerous times, and I just posted again, this thing I've been talking about, right? This Wyckoff structure I've been talking about since last June, right? And so we get this, what quite clearly appears to be accumulation down here, okay? Now, I am having people who, haven't studied Wyckoff, right? And telling me that it has to go down here. And they're telling me it has to go down because they're saying, you're so stupid. This is not accumulation. It's just started, And some of the excuses that you get are things like, well, this right here has the highest volume, and this is the selling climax. And selling climax. Climax means you have to have the highest volume there. And since you don't have the highest volume here, this can't be a selling climax. Springs and terminal shakeouts have to have less volume. But see, here's the problem. If you've actually studied Wyckoff, you know that's a whole bunch of nonsense, right? People get so caught up on nomenclature. What is the title of the label? SC, selling climax. And they say, okay, what does climax mean? And they say, okay, so you can't possibly have more volume anywhere else. And yet, when you study Wyckoff, you learn that sometimes you will get more volume in your preliminary support, your PS there, prior to the selling climax. Because it's the first time that it shows up, right? It depends on how has it been coming down. If you have a lot of supply coming in on the way down, by the time you get to your preliminary support, that volume will be higher than your selling climax. And that's actually what we have the case here. But then when you get onto something like a terminal shakeout, again, to understand what a terminal shakeout is, you necessarily are going to have more volume. That's what a terminal shakeout is, right? It's this idea that we're going to shake out the last of the weak hands. And the weak hands aren't just retail that doesn't know what's going on. Weak hands are traders, right? Short-term traders. You're getting it out of their hands into the longer term hands, right? Why do we do that? We do that because when you do that, that means there's less supply to come in to keep price from going up. If you get all the short-term traders on that downtrend giving you their money or giving you their supply and you're keeping it, right? And you're going to hold it to your way up here or higher, then by the time you start rallying up, you get to that tipping point where there isn't enough supply to stop price from rallying. This is why this happens, right? But again, their bias is, oh my God, it has to go down lower. So this can't possibly be over here because, and then they start to try to make sense for themselves. Again, nomenclature, selling climax. Climax means most, right? So you can't possibly have more volume in your terminal shakeout or your spring. By the way, there are 3 types of springs, guys. There isn't just one type of spring, but there are 3 types, okay? And one of them is a very heavy spring. It's not a terminal shakeout, it's a spring. But it has more volume than your selling climax. Now, so these are real world applications. These are real world things, right? And so, again, it's because you're so intent in your head, in your bias, your emotion, that price has to do a certain thing. You didn't get in down here. So now you hope and pray that it comes back down. The odds are, though, if it does, you're not getting in anyway, right? You're not getting in anyway. But as we look through this entire structure, when we look at the volume profile against the price action profile, it looks like quite realistically here that this is accumulation in this area here. And Roman from Wyckoff Analytics? Oh no, it was Mr. Frazier. Yeah, that's who it was. Anyway, he made a great comment about how when you're looking for your back up to the edge of the creek, it's this area where you hold above your previous resistance for a period of time. Because what that shows you is there's just not enough supply coming in to push you down, right? So here's this previous resistance here at 24 and change, right? And we've been holding above it here. I mean, we broke out above it here, almost 41 days ago, right? We've been sitting up there about a month up here. And this is what we look for in the back up the edge of the creek, right? Which is just the pullback to your breakout level. That's all that is. But when you are emotionally charged, right? When you are emotionally connected to some specific thing that you think has to happen, right? It's going to make you not listen. And instead, it's going to make you argue things that, had you actually studied it, you would know that what you're arguing, it sounds like it makes sense, but it's not realistic, right? It's not correct. And there's nothing myself or anybody else can do to convince you otherwise. So these are things you have to watch, right? When you're looking at charts. Yeah, exactly. Phase E. Yeah, exactly. Phase E here. You've got your phase A, which is your stopping phase. Phase B, which is your building of a cause. You got phase C, which is your final test of the lows. You got phase D, which is your interior markup. And you have phase E, which is your exterior markup. Yeah, exactly. By the way, guys, if you ever choose to learn Wyckoff, stop worrying about the damn schematics. Stop worrying about the nomenclature of the labels. All of that is just made to help you understand what's going on in the phases. The phases, A through E. It's like when you study Elliott wave, and if you study Elliott wave correctly, you're going to study wave psychology. And it tells you why the wave is doing that. What is happening in wave 1 with the market, right? What is the psychology of the market, the emotion of the market at that time? What is wave 2? What is wave 3, wave 4, wave 5, right? It's the same idea with Wyckoff. You've got phase A through E. And the nomenclature, the schematics, they're just meant to help you understand what's going on in the phases. Because the phases are what matters. What is going on across that period of time with your price action and your volume? By the way, if you're doing Wyckoff without volume, you are not doing Wyckoff. If you are throwing up a chart with no volume analysis and just that schematic and go, look, it looks like it, you are not doing Wyckoff. Stop listening to people that do. Just stop, guys. You're just feeding the nonsense. And the problem with that is you don't know what you're doing then. And they clearly don't know what they're doing. And I don't care how good they are at whatever other thing they do. If you're not doing something correctly, you're not doing it correctly, period, right? Does this make sense? Stop worrying about, oh, well, this trader was good at this, so I'm going to listen to what they say about this. Well, if they are not doing this correctly, then why are you listening to them about this? You can listen to them about the thing that they do well. But if they're trying to talk to you about a thing and that thing is not correct, which you won't know, by the way, because you haven't been through the training, right? So you won't know. This is the problem. See, this is where I tell you guys, you have your hands. You have so much information available for free, right at your fingertips with the internet, right? The problem is you don't know what you don't know. And I'm going to tell you right now, when it comes to trading, well over half the information you're going to find out there is either just half truth, right? Somewhat correct, but somewhat not, or it's an outright lie. And not that people are out there trying to lie to you, trying to make you believe it, but because they never actually really studied it themselves and they're completely wrong on it. But they know how to market. They know how to tell you the things that you want to hear so that you send them money. And then they teach you the wrong thing. And then you lose money with it and you wonder why. Right? Does this make sense, guys? This is my warning I give you guys constantly, right? This is why I do this with you guys. This is why I don't just throw a chart up there and say, here's the levels, blah, blah, blah. There's a lot of channels out there doing it. They got hundreds of thousands of followers because it's easy, right? People are lazy. Nobody wants to learn. But if you come onto my channel, you're going to have to learn because I'm not just going to throw levels out there for you. I would much rather you actually pick up something, you learn something that you can do to become a better trader. Even if you never actually come join us at TWC, I want to make sure that your time spent here with me is at least fruitful in some way, that you are getting some kind of knowledge that you don't have. Especially if it's knowledge that's out there being pounded around as something that's, that they're telling you something different and it's not true, right? Let me see here. So, let me see here. Ahmet, what's going on? It says, Chris, the B wave and the second wave too, this one I think you mean right here, is going beyond the 1618 of A and in your system, yours, Ahmet, right? That is not allowed. That's why it cannot be a flat, in my opinion. Except that the Bible of Elliott Wave, right? Basically, the text of Elliott Wave principle, which is by Frost and Prechter, says that it can. Right? So, whether you want it to be or not, the Bible, the tome of Elliott Wave analysis, right, by Frost and Prechter, says that it's okay. And what do they say? They say if wave B is over 105% of wave A and wave C does not, ends prior to where wave A ends, right? So it gives you a higher low, then it's it'll be a running flat, right? And so there is no actual, if it gets to this point, it's done. Now, me personally, I'm like you, I do have a certain level, right? If the wave moves up more than 0.618, right? So more than 61.8% of wave one, I will look for another count. I will not consider it a flat. That's my level, right? But if we actually look at, again, the Bible of Elliott Wave, right? What people look at, the tome, the definitive guide, right? There is no 1.618 extension. If wave B is 1.618 of wave A, then it can't be a flat, right? Yeah. So, I mean, again, that's just, again, that's just based there. Now, if you want to, in your personal opinion, say, oh, well, I just can't accept this as a flat, that's up to you, right? But just understand that you are limiting it based on you, not on what the actual rules and guidelines of Elliott Wave say, right? Does that make sense? Yeah. So for me, like, again, I would measure out wave one here, right? I'd measure out wave one to the wave A pullback. And I just want to make sure it's less than 61.8. If this were to break out above that, then I go, okay, maybe not, right? But otherwise, to me, doesn't matter a whole lot that because again, for Elliott wave, there isn't that rule, right? Oops. Here we go. So if we measure out wave A, right, you can see that it does go just beyond the 1618, almost at 2.0 there, right? So yeah. But again, if we do look through, a lot of Prechter stuff and other people who've been around for quite a while doing it right, you'll see occasionally they will have a very large wave B, what we consider very large, as a flat. And often it ends up being a running flat. Sometimes it's just an expanded flat. Now, that said, I've said before, this count may not be correct here. It is possible we could be a 1, 2, 3. Maybe you can get a 4 out of this and then a 5, right? And what you're still looking for here is you're still looking for a triangle, right? So for me, I say, okay, well, here's A, B, C down is A, and then A, B, C, D, E is B of B is a triangle. And then 1, 2, 3, 1, 2, 3, 4, 5 for C of B, right? And then we get 1, 2, 3, 4, 5 potentially here as an ending, or as a not an ending diagonal. Well, yeah, I guess it would be an ending diagonal because no, it wouldn't, because 3's down here. That's right, we changed that because we got this new low. So it'd just be, again, 1, 2, 3, 4, 5 potentially gives you 5 down for C. Look for that move up, right? But you can, again, potentially you look at something maybe like this is 1, 2, and then this is 1, 2, 3, 4. Somehow this is 5. That would give you a 3. And then you go A, B, C, D, E maybe. That gives you a triangle for 4. And you go 1, 2, 3, 4, 5. You have to get 5 out of there. In which case, then this whole thing could be 1, right? So that's still possible. That's still possible. I'm not saying this is definitely how it's been. As a matter of fact, when I put this chart up on Twitter recently, I said, listen, the Elliott wave count may be wrong, but this Wyckoff labeling should be correct. And if it is, worst case scenario, I think really should be that we get around to the pivot here, the daily pivot. That keeps us just above this resistance, right? And does that make sense that this would be a 1 and then we'd have a small 2 like that? I mean, the pullback would be what? Whoops. Pullback would be only like, it wouldn't even be 38.2. Not saying it can't happen, but again, you look and you go, well, what makes more sense, right? For me right now, 1, 2, 1, potentially a running flat as a 2 here makes more sense, especially if we're looking at a target, ultimately a target up here of 50,000 or so, right? And that's the target we're looking at. And what would make that happen would be ultra aggressiveness down here. How would that show off? It would show off as a 1, 2, 1, 2. And not only that, but that second 1, 2 being a running flat because of the psychology behind a running flat. What does it tell you? So, I lean toward this count because it makes sense of that target up there. And you say, okay, well, how do you get that target up there? Well, again, Wyckoff Analytics did a great, I've got the link on my Twitter. You guys will have to jump over there to check it out. I posted, I think, yesterday. But it does a great PNF count, point and figure counting, which, again, if you're new to Wyckoff, you may not understand it. But Wyckoff has a different way even of doing point and figure counting than normal point and figure counting. And the target on that is up there around that 50,000 area. And it's based off this structure and the phases in here and what's going on these points. So, I mean, I feel pretty good about it. Wyckoff Analytics, Wyckoff on crypto. These are the 2 leading Wyckoff companies. And they both have the same agreement as far as the structure here goes. Matter of fact, the Wyckoff on crypto, that I think his name is Butterfield. I think that's what his name is. Anyway, I don't mean to, hopefully I got it right. But he owns that company, and that company is actually Richard Wyckoff's company. It was the company that Richard Wyckoff started, 100 years ago or whatever. And so he owns that now. So he has all that information from back when Wyckoff was around, right? a lot of stuff that you don't even have available that's for sale anywhere, right? And so, again, I'm not saying that, this definitely says that this is correct, but man, oh man, if you're looking for, okay, well, what increases the likelihood that's correct? Well, I mean, if you're up there with, the two leading Wyckoff companies, well, then yeah, feels pretty good, right? Does that make sense? Let me see here. Hank answered that question about volume. Let's see here. Volume expands on the breakout. Volume expands on the breakout. Let me see. Let me kind of catch. Let's gotta catch up with you. Todd Butterfield, that's his name. Hank says, yeah, that's him. A bit of an ass, but he's not bad at Wyckoff. I don't know about all that. I don't really know him, but again, you pointed out that he's got that same view of the chart, that I do. And so, yeah. So we'll see what happens here, right? I do have this parabola as well. I'm not sure it really matters or much or anything, but it gains more likely, support that it matters. If we remain above it right in this area, right, we kind of come to it and then take off again, right? But I've got it on there anyway. For me, again, a big thing for me. Let me see here. Where's the other chart? So here are some levels that I've been watching, right? And so again, we've got these different various levels. So the most important ones, of course, being these downtrend kind of things here. This one, I don't know what happened here. I don't know what that level is. Anyway, it's been the long-term, resistance breakout here on volume and large candle spreads. Then we've got this kind of other one here, which I'm not such a big fan of because at only 2 points it touches are way up at the beginning. But nonetheless, we broke out through it, used it as support, break back up, right? This is an interior resistance, which isn't really very important, but it was important enough that we kind of got this breakout, we got rejected, support, and then broke out, big column, large spike of volume, tested support. We've dropped right below it right now, so we need to kind of get out above that to kind of suggest, okay, we got this chance to rally back up, right? Horizontally, we had this down here at around 26.7 or so. And then we've got this resistance support level kind of up here at around 32,000 or somewhere right around there. And those are kind of the levels, just really the levels that I'm watching on this. If we look locally here, you can see that we've got lower highs, got higher lows. So bullish divergence, right? Or bearish divergence drops back. We're paying the price now. And now we've got this bullish divergence coming from the swing low to the current swing low. Hidden bullish divergence because we have a higher low here in price with the swing lows. And we've got a lower low over here with RSI. So we do have this hidden bullish divergence, which is a continuation of the larger bullish. It means continuation of the larger bullish trend, right? So again, looking for the breakout, see if we can get that and the rally up there, right? So, that's kind of what I'm looking with that. Other things, again, I've shown you this one over here. Looking at this idea that, again, this big kind of channel coming off this 2011 here to 2013 down to the swing low at 2015. We had a slight deviation out, came back to the EQ area, pushed up, rejected, came down almost to the support. Here we are rallying back up again. And, it makes sense. Maybe we're looking at something like this, kind of move up, right? Give us 5 waves up. Other than that, we've got this other chart over here. And this chart, again, shows these kind of 2 lines here. But this red right here is actually this point right here. Okay? So you've got kind of this support coming off here, right? And it creates this big move up. You got kind of this support right here, which potentially may lead to this move up. Now, it doesn't have to. It doesn't have to. Okay? But, again, when it's similar, you want to watch it, right? And so now, in the same kind of movement would be like an 86% move, and that would be up here around that 50,000 area. Again, just another way to look at that 50,000 target, right? So yeah, that's what we're kind of, just some things I'm watching, right? No guarantees on this, but I am watching it, right? Again, my bias is to the upside because of the idea that, again, what's potentially looking here as accumulation, and then this being back up the edge of the creek here, still hanging out above that resistance. Again, that in and of itself is most often, a sign of strength, right? It's this idea that you can break out of that large accumulation range and then remain above it. There's not enough supply coming in to shove you back down. And so this is the thing we want to see. And so if we can, of course, get this breakout higher here, that should confirm it. And we should be looking for those P&F targets up there at around, upper 40s, lower 50s. So let me see here. Yeah, so that's kind of where we're looking at it. The VIX 1D, guys, here it is, just open. This is the hourly here. You can find this, like I said here, at VIX 1D. If you type that into TradingView, you'll get that. Again, this is the daily, not the 30-day contracts that you're used to for the volatility index. Okay, so these are going to be a lot more volatile than the 30-day. Okay. So be careful if you use that. Just understand what you're doing. But again, it's just been released back here on the 23rd, Monday. Okay. Let's see here. Gold. Gold again, still looking for the idea that maybe we've hit wave one, or maybe we've got a little bit higher to go, and then the pullback to wave two. The move out. It gives us potentially a wave five up here at 2750 at least. So, big move up there. If that happens, another, 25, 26%. No, wait, was that 27, right? 27.5% or so almost from where we are right now. But, if this is wave one complete, then we should expect a pullback down here toward that 1850 area, most likely, potentially 1815, this kind of area right here around the weekly pivot. If we can get up a bit higher, then we'll come back and you should be on top of that weekly pivot. Again, probably more or less the same area. Just be a little bit bigger wave two drop on that. Let's see here. Ethereum, Bitcoin. Again, we've been looking at this. Looking at, again, an A, B, C as W, triangle for X, and then A, B, C as Y. So now we want to see a breakout higher. We're looking for a breakout above this triangle resistance, so wave E of X at 0.070624. Well, wait, 0.073544. If we can get above that, then, if this count is correct, 5 waves up, 3 back, moving, then we should be looking onto wave 3, and wave 3 has a minimum expected target up here of 0.120893. Okay, so that's kind of what we're looking at here. We've pulled back just prior to 61.8%. If we continue going lower, obviously we're going to look at that 61.8, and then, which is 0.060744, and then the 70.5 at 0.057868, and then the 78.6, which is at the range low here at 0.05513. Those would be the targets if it were to drop further. That's where I would look. And then we'd just have to adjust this. Okay. So maybe this becomes an ABC rather than a WXY here. But that's what I'd look for there. But, again, breaking out above that wave E of X triangle resistance there should indicate that wave 2 is complete and we're heading up to wave 3. Doesn't mean it happens overnight, guys. Okay? Doesn't mean that Bitcoin can't rally too. It just means that Ethereum rallies harder than Bitcoin. That's one way to look at it, right? The Ethereum can rally against Bitcoin. All that means is Ethereum's price is making a larger movement higher than Bitcoin's price is, right? The value is gaining, or it means that Ethereum's going up and Bitcoin's going down, right? But people tend to just think of the latter. They just think, okay, well, the only way Ethereum Bitcoin is going to go up is if Ethereum goes up and Bitcoin goes down. No. Ethereum could go up and Bitcoin could stay flat. Ethereum could go up, Bitcoin could go down. Ethereum could go up faster than Bitcoin's rallying. Or Ethereum could drop slower than Bitcoin's dropping. In all those ways, you will see Ethereum versus Bitcoin, this chart here, going higher. So I know some people are concerned about, well, if Bitcoin's going to rally up, then how is Ethereum, this pair going to rally? Well, again, this could take some time to make it up here. And if there's going to be a big, Bitcoin rally, right? You might have a couple of stints where it makes a lot of movement in a short period of time. And during that time, this one could be moving sideways or pulling backward a little bit, right? And then as Bitcoin moves sideways, pulls backward, you can see Ethereum break out against Bitcoin. Does that make sense? Let me see here. So that's that. And then we've got, I said we talk about Doge. Here's Doge. Same count I've been looking at right now, so nothing to change on that. Locally, it looks like we've got a wave 1 here. So, 1, 2, 3, 4, 5 gives us 1. And then we have an A, and then a triangle for B. A, B, C, D, E. It's a running triangle because wave B breaks down below where wave A here, red A, starts. Okay? And then we get this movement down a little bit lower, gives us potentially wave C of 2. And then 5 waves up to the pivot area for wave 1, pull back for wave 2, rally up. Anyway, wave 3, this is the weekly chart. Wave 3 has a minimum expected target of 0.24056. It has a secondary target of 0.28249, and then the third target of 0.35032. That'd be the wave 3 going up. What do we need? Well, we need right now a breakout above this swing higher, because if this is 1 up around the pivot, then there's 2, the pullback is wave A, the pop-up is wave B, the lower high there, and then wave C is what we're currently doing. So wave B would be 0.09500. So my thought is, if this count is correct, and if we're breaking out above that, we should be looking minimally to 0.24056. And that would be a rally of how much? Rally of about, oh man, just I got white text on there. There we go. There we go. That'd be about almost 150% rally on that breakout above wave B. So that's kind of what I'm looking for Doge right now. Let's see here. Litecoin, what'd you say there? Litecoin against Bitcoin? Let's see. I haven't looked at that in a bit. I think since the last time we looked at it here. Yeah, been a little bit. Let's see here. 412. So a few weeks. What do you got going on here? Nothing's really changed here from what I have. I've got this as potentially a leading diagonal as a ascending broadening wedge. And so that would give us an expected wave 1 target up here at around 0.007190. And that's just based on the height here of wave 4, of what I believe may be wave 4 here. But what do we need? Well, an impulsive breakout above the weekly pivot will signal that wave 4 is probably complete. But we need a breakout above wave X up here at 0.004827 to give us confidence in the count there, right? If we look at here, it's possible. Maybe this is a triangle right here, in which case it would end. We just need to break out above 0.004179 right here. So, it'd be like A down and then A, B, C, D, E. Wait, let me make sure that's, sorry, one more time. 3757, 3774. No, that wouldn't work because this gets us a lower low. Never mind. That's why I didn't put a triangle there. Because, again, a symmetrical triangle, you should be getting higher lows and lower highs. And instead, you would get a lower low out here toward the end of the triangle. So that wouldn't work. Do I expect Doge to hit those targets in line with Bitcoin running to 50,000 or shortly thereafter? No. I don't have any expectations as far as time goes, guys. I gave up trying to figure out timing a long time ago. I tried it for years, never could get anything consistent. I stay away from timing. I look for price levels and I look for entries and exits, stop loss, stuff like that. And I let time take itself, however long it takes to do it. I'm just interested in finding a reason that price may move from one point to another. A reason that makes sense, right? And is more likely than not. And that's all I do. So I don't look at timing or anything like that. I guess my main thought would be if you get a strong rally out of Bitcoin, the likelihood of something like Doge or running up shouldn't be so great with it, right? Like, because if you're getting a big push up in Bitcoin, usually you're going to get that money moving from other alts into Bitcoin to do it, right? And then after Bitcoin's rally, as it gets toward the end of that rally, the money then flows out to alts, right? So yeah. But as far as time goes, really, other than that, I really don't do time for the simple reason it just usually doesn't work. And I'm more interested in, trading things that work versus not, right? So wave 3 should bring us to 0.012. What are you talking about? For which one? For Doge? I don't know which one you're talking about there. Wave 3 on Doge is up here at 0.24056. That's this wave 3 here. Are you talking about this wave 3 here maybe? Well, it depends on if wave 2 is done or not here. I don't know that wave 2 is done yet. If wave 2 is complete, it'd be 0.14771 if it's complete around that area. But I don't know that it's complete yet. For LTC BTC, 0.12. Oh, 0.12417. Yes. If this is correct, well, now that's stepping out a bit. That means wave 4 needs to be done. Wave 1 needs to reach up here at 0.007190, and then wave 2 needs to pull back to 0.003639. If we get those things, then the initial wave 3 target is that 0.012417. But until we get all those three things, we don't know if that's where wave 3 is going to be. If wave 1 is shorter or wave 2 is shorter. Oh, excuse me. If wave 1 is shorter or longer, or wave 2 is shorter or longer, that's going to give us a different wave 3 on there, right? So yeah, it just depends if we can hit those three levels and do that. Okay? Thank you, John. I appreciate that. Yeah, sneezing, man. I tell you, the weather's changing. We're in the spring over here. There's a lot of grass and flowers and stuff. So yeah, different than where I was there in the the hill country. Different allergens and whatnot. But yeah, so I think Litecoin, Bitcoin looking pretty decent here on the weekly. You can see that we've got a hidden bullish divergence. Almost a hidden bullish divergence, right? It actually dips down lower here because you have the, overall the higher lows, overall the lower lows. But again, that swing low on RSI is the not actually the last low here. It's the one just prior to it. So as we talked about earlier, it's not a true divergence on the weekly, but it is showing us that there is a fight going on between demand and supply, and demand is showing up and trying to increase. It's increasing and getting stronger. So now we just need to see if it follows through there, right? So, all right. Anyway, well, so there it is, guys. That'll do it. As always, remember, the only thing you control in the market is how much you lose. So again, risk management, guys, it's that not very sexy thing that is probably the most important part of your trading. If you can't it doesn't matter how good you think you can do everything else. If you don't have your risk management down, you can trade, do all those great runs, and then one trade, you can lose it all. Does that make sense? So you guys need to be careful out there. Make sure you're doing that risk management. If you're in the mentor program, guys, I'll see you guys in just about an hour to make up for last Friday. And so we'll talk about that. I'll put a message in there. Everybody else, we'd love to have you. HowToTradeToWin.com is where you can get it at the moment. Soon you'll be able to get with us at TexasWestCapital.com. Man, oh man, tier 3 is where it's at, right? So that's it. Of course, other than the mentor program, the tier 3 is just, it's been our flagship until the mentor program came in a few months back. So, like I said, risk management's where it's at. The only thing I can tell you guys really to help you out is don't enter a trade just because there's a chance. All right? There's lots of chances. You're going to lose a lot of money. Look for your higher confidence trades. Those trades that your entry has a confluence of factors, right? You're getting a bullish divergence on a pivot or something, right? Or you've pulled back in 3 waves to the 61.8 retracement level, right? Or you've done that and then you've broken out above wave B on that pullback. Those are the things. It's a confluence of factors coming in to make it a higher confidence trade. If you're concentrating on that rather than entering just because there's a chance, you're going to save yourself from losing a lot of money that you don't have to lose. You shouldn't be losing, all right? So there you go, guys. I hope you guys have a great day, a great week. I'll be back on Friday, 11 a.m. Central Standard Time. Make sure you guys are following us, subscribe to us on whatever social media platform you're on. It'll be TX West Capital on Twitter, pretty much Texas West Capital on, just about everywhere else, Facebook and Instagram and all those things. All right. All right. Y'all take care, and I'll see you next time.